A very good evening, ladies and gentlemen. This is Junkit from Phillip Nova, and welcome to the introductory bootcamp for our trading challenge for 2026. Now, the main speaker for today is actually Murali, and he'll be speaking after I give you guys a brief introduction of this competition. I'll be going through what is it, also to go through some of the important timeline that you should be aware of in this trading challenge. Right, so without further ado, we'd like to just introduce ourselves. Phillip Nova, for those of you who are not familiar with us yet, we are actually part of the Phillip Capital Group, and we've been around since 1983. So prior to us being Phillip Nova, we were actually Phillip Futures for most of our history. Right. It was only in the previous few years that we started to onboard more product offerings, things like stocks, FX, CFDs, and basically today we offer the full suite of investment and trading products for our traders, for our investors to trade using our platform. So with that, we have expanded way beyond futures, which was our previous stronghold. Now we are a multi-asset single broker, and we are currently Phillip Nova. So the group has also clearing memberships in 21 global exchanges, all around the world. So while our bread and butter used to be futures, today we are one of the region's top brokerages for trading of stocks, CFDs, Forex, global futures, and commodities. Now, there's one reason that all of us are here today. Right. So, dear young investors, I'm so glad that you guys have signed up and took up this challenge, the Phillip Nova Young Investors Trading Challenge 2026. Now, this is not the first time that we are having this competition. In fact, I think we have had this competition since I think 2021. So since then, we have many young traders who have joined this program, who have graduated from this program, and some of them they've actually started their career in trading as well. So, what is this Phillip Nova Young Investors Trading Challenge all about? So, essentially, you are going to embark on a 2-week simulated trading challenge, whereby I believe if you have signed up for the trading challenge, you would have received an email containing your account credentials to your Phillip MetaTrader 5 platform. Now, that is a platform that you will be using to trade for the next 2 weeks. You'll be trading in markets across, FX markets, CFDs. There are many types of CFD products that you can trade using this account. You can also trade some of the commodities and precious metals as well. So this simulated account, it would have a fund of 100,000 USD in demo funds for you to play around to trade. Now, for those of you who are new to trading, I think no worries. That is also the reason that we are here today, to have this session with you to go through the basics of trading, 101, what is FX, what is CFD. And then Murali is going to also go through with you some of the basic knowledge in technical analysis. And quite importantly, he'll also be demonstrating to you how to use this trading platform, which you will be using over the next 2 weeks. Well, for those of you who are already trading, with experience in trading, I think you've also come to the right place, because I think historically we tend to have this track record of attracting all the youngest, I wouldn't say youngest, but the brightest young investors across Singapore to come to one place, to trade in a simulated environment. And at the end of 2 weeks, we'll see who ends up in the leaderboard. So we're very glad that you guys are here with us. So now let's go through what is up for grabs in terms of the price structure. So at the top place, you will be receiving the top winner, with the highest equity at the end of 2 weeks, will stand to win up to $2,000 in trading credits. The second prize is up to $1,000. Third prize is up to $500. And for those of you who rank between 4th to 10th place on the leaderboard, the reward is going to be $100 each. Now, these prize rewards, they are actually will be credited into your trading account. So after this trading challenge, once you open a live account, it costs nothing to open a live account. It's free. There's no minimum funding also. And you will be receiving your prize money in the form of trading credits directly into your trading account. Now, you can use those funds to start placing trades, in the live market, or you can also withdraw them. So it is basically cash, but we deposit them into your trading account. So let's break down the price structure, right? So because in our poster, we say it's up to $2,000, the top price. So the maximum price is broken down into two main components. The first component is what we call the guaranteed price, whereby if you're the first place, right, and you fulfill the criteria, and you'll be receiving the guaranteed portion of the price, which is $1,000. The bonus portion comes in. It is to welcome those who look to start trading with our live platform. Right. So to qualify for the bonus portion, actually, it's very simple. You only need to place 4 trades with your live account by the end of September. Okay, and then within this period, you don't perform any withdrawals from this account, and you'll be entitled to unlock the remaining of the bonus price. Okay, simple enough. Guaranteed price, you get it for sure, no requirement. Once you fulfill the eligibility, the bonus price will be granted to you if you place just 4 trades in your live account by the end of September. Right, then you receive the maximum price. Because this trading challenge, right, is going to last for the second half of June, second half, last of August, and we're going to have our closing event at the start of September. Right, so by early September, the competition would have concluded. So you'll have the full of September to trade and then to receive your bonus price. And let's look at the challenge timeline. Today, here we are, 13 August 2026. We are at the stage of this introductory bootcamp, right? And then at 17 August, which is next Monday, 5 a.m., the challenge will be kickstarting. Okay, and you will be able to log into your trading platform to place trades for 2 weeks, for about 10 trading days. And the trading challenge is going to close at 12 p.m. sharp on 28 August. Right, so do keep note of this. We'll take a snapshot as of 12 p.m. on 28 August. While we wouldn't freeze your account or we wouldn't close your positions, right? We'll just take a snapshot as of 12 p.m. So whoever who has the highest equity as of 12 p.m. 28 August will be deemed as the winners. Okay. 3rd September. 3rd September. This is very important. This is where, all of us, we've been trading virtually, on our own. We come together, to celebrate this experience, to celebrate the achievements that you've made throughout these 2 weeks. Okay, we'll have a face-to-face award ceremony and networking event on 3rd of September. Now, the venue is going to be at Phillip Nova office at Raffles City Tower near City Hall MRT station, and food will be provided. Right, because we noticed that as a young trader you may be picking up trading, but that may be just yourself. Like the friends around you, they don't trade, and so you don't have a community of young traders to bounce off ideas, to learn together, to share your experiences. And I think that is what this is all about. We hope to create this trading young investors trading community. So by you attending this event, you'll be meeting like-minded individuals. And we'll also be inviting a keynote speaker who is an experienced trader, and he'll be sharing with you, he or she will be sharing with you their wisdom of being in the markets for decades and many years. Right. So do bear in mind that today, after this session, you are still able to log into your trading challenge account to place a few test trades. Okay, but tomorrow morning, Singapore time, we will be disabling access of all the trading accounts and reset all the balance to 100K. Right. So this is to give everyone an equal head start, ahead the starting time on Monday. Right. So do take note of this. And in terms of eligibility to win prizes, as you know, as we term this trading challenge, it's a young investors trading challenge. So the goal here is really also to provide an avenue for young investors aged 18 to 30 to participate in a risk-free environment to trade and meet each other, right? So if you are between the age 18 to 30, you are able to participate and you're eligible to win prizes at the end of this trading challenge if you are among the top winners, right? If you are outside of this age range, unfortunately, this trading challenge would not allow you to be winning these prizes. right? But of course, we got other initiatives which you can take part of as well. But for this particular Young Investors Trading Challenge, we're looking at providing an opportunity for those between 18 to 30 years old. Right. And secondly, also to be eligible to win the prizes for this trading challenge, you shall not be an existing account holder for with Phillip Nova. Okay, so if you don't have a live account with us, you are free to participate in this. Right. And the third one, to be eligible, we must also see you have made at least 5 trades on your trading challenge demo account. Right, at least 5 trades. This is to share with you. This is to share. This is to share with you one of the past trading challenges that we have had in 2022. Right. So this his name is Mihir. He was the champion of our trading challenge in 2022, and he actually managed to triple his account within just a few trading days. Well, of course, due to his achievements, he was also featured on a few media outlets like The Edge and Yahoo News. And yes, I think he did well in this trading competition, trading, I think, oil CFDs. Yeah, which at the award ceremony, he did share, with us that he was trading oil CFD. He shared with other participants about this. And subsequently, I caught up with him. He actually managed to land a oil trading job in London. Okay, so what I'm trying to say here is that by being in this trading challenge, right, if you are a participant, okay, you'll be receiving a certificate of participation. You could use this, for your future, job search. Okay, if you're a winner, okay, you'll be receiving a certificate of achievement, which would be an additional bonus in your, let's say, if you're looking to extend the career in trading industry in the future. Right. So how we determine if you're eligible to receive this sort of participation? Okay, you must at least have placed a few trades, or at least one trade during this trading period. Then you'll be eligible to receive the cert of participation. Right. And we look forward to hosting you guys at our physical event on 3rd of September here as well. Okay. So I'm going to cover some of the frequently asked questions, right? So the first one is who is eligible? Okay, so I've covered this in the previous slide, between 18 to 30, and also it's not for non-client or Phillip Nova, right? Because, there are many participants who've joined us in the previous years and then they've since been account holders with us. So I think this is all about giving fresh opportunities to people that haven't been in touch with us yet to stand to win the prizes. And secondly, after you registered for a trading challenge, you may notice that you don't receive your MT5 account credentials. So you may want to try to find it in your spam folder. So chances are you will find it there. So the third one, can I place trades before the challenge starts? You can until tomorrow morning, where we'll be disabling trading access to reset everyone to 100K. And the fourth question that we normally get is that when you mean trading credits, do you mean trading credits that you cannot withdraw? So what we are giving away is really cash prizes, but it will be credited into your live trading accounts, and it can be withdrawn just like your funds in your bank or any other brokerage account. It can be withdrawn. Okay, another one is, can I register for the challenge for more than once? So each participant, you are only allowed one-time entry. So let's say if you've mistakenly registered for both accounts and you've accidentally placed trades on both accounts, you need to let us know at the very start. Okay, so at the end, when we are trying to gauge the winner, right? If let's say we see that you have 2 accounts, both holding positions, then you'll be disqualified because each person is only permitted 1 account. The next question is, let's say if you have registered for this trading challenge account, but you're unable to place any trades on it. Why? The first reason is that it could be that you've registered tomorrow. That's why we've disabled access. The second one is that it could be because once you register, the trading access is not enabled by default. So we would do a periodic enabling of the trading access for you. So by end of day, around 6 p.m. every day, you should receive your trading access. And the next question that we may get is there any maximum drawdown rule or any restriction regarding news trading and those kind of things? The answer is no. Right. Before I hit the time to Murali, who's the main speaker for today, I'd like to invite you guys to join our Trading Challenge participants only Telegram channel. by scanning this QR code. So this is very important because we will be communicating with you guys primarily using this channel throughout the trading challenge, right? So if you guys join this, you'll be receiving announcements and updates regarding this trading challenge, and we'll also be sharing bite-sized information and daily leaderboard with you guys through this channel. So you can scan this QR code and be part of this trading community, right? So with that, I like to just gently reminder for you guys to sign up for our award ceremony in-person event on 3rd of September. Okay, you'll be able to find that link to join in your email as well. Right. So with that, without further ado, I'd like to pass the time to Murali, who is currently an FX dealer at Phillip Nova. And interestingly, he was also one of the past participants and ex-winner of the Phillip Nova Young Investors Trading Challenge 2022. So of course, he's the best person to guide you on how to navigate around this challenge. And hopefully, you'll have an insightful session from him. Yes, with that, passing the time to you, Murali.
Thank you so much, Junkit, for the warm welcome. And I think once again, welcome to everyone here, especially young investors who are taking a part of this fantastic trading challenge, which I once did back in 2022. And fun fact is, I was a huge fan of all these trading challenges back in the days because I just wanted to challenge myself to, whether my strategy and even my emotions, whether they can be up to the competitive environment levels. All right, so without further ado, let's dive into the actual bootcamp and why some of you guys might actually be here for to understand what are some of the instruments available in FX, or what are some of the other financial instruments available at Phillip Nova itself. So once again, I'd just like to issue a disclaimer that the presentation for today will actually be just for general circulation purposes, and it does not really take into account the specific investment objectives, neither trade ideas or any financial situations or particular needs of any particular persons. So whatever trade ideas that you see here are not meant to be financial advisors as well. Right, so a bit more introduction for myself. If you did not catch the introduction from Junkit earlier, so I've been trading FX, precious metals, and including CFD for the past 6 years, and I've joined Phillip Nova as well from this trading challenge, and also part of my own interest in advancing into my trading journey. So what I do at Phillip Nova is I specialize in a lot of market making, a lot of house risk management, and particularly my job surrounds exposure management when it comes to FX, precious metal, and CFDs. So as a dealer, we also focus a lot more on short-term trading opportunities as well, because we are on intra-shift, so we got to manage our exposures on an hourly basis or even to the minutes basis as well. So some of my articles in Traders was published on the Business Times and other social media outlets as well. So apart from my professional career, prior to my career at Phillip Nova, I was actually working on a trading channel, and thankfully called the Smart FX, which we have propelled the channel all to about 100K followers. So what I shared during this channel is just possible trade ideas, how we can view the market structures, how can we view FX like in my perspective. Yeah, and of course, Junki has also shared that yes, I was actually one of the winners during the Phillip Nova Trading Challenge back in 2022. I generated about 35% returns in 2 weeks. Of course, I'm not the previous the top number one winner. I think he generated close to 300%. Yeah, but ultimately, I think we all both understand that risk management plays a huge aspect in trading, and just because you see astronomical gains in a short period of time does not mean that you can replicate it on a day-to-day basis from a higher trajectory or higher time frame trajectory, right? Yes. Okay, so let's move on to what I'll be covering today. I'll be covering more towards the introduction towards FX CFD trading, a bit more on fundamental or technical analysis, and how possibly you can formulate your own trading plan using your own risk management techniques and some of our encouraged risk management techniques as well. Lastly, I will then be ending off my presentation today with a Phillip Nova's MT5 trading platform, where I'll walk you through how can one place a trade very seamlessly and making the platform work for you rather than you working for the platform. So what is trading? So trading is a systematic approach with a structured rule and, of course, with a predefined plan. It also resembles consistent execution. That means with an executed discipline, trade after trade, sequencing yourself in a methodical manner. Risk management is huge parts in trading. So it's all about controlling losses and protecting capital as well, where it's also probability driven. Now, trading is all about probabilities. Once you understand that it is a probability game, things become much more easier from a psychological standpoint, from a mechanical standpoint, from an execution standpoint, right? And it's also very age-based. You need to have an age in the market. If you have no age in the market, you're going to be bleeding, not just from your own capital, but also from your own psychological elements as well. Now, what is trading not? Right? It is basically you're not gambling on the market, right? Essentially, what we don't constitute as trading is when you have no clear criteria, no clear plan, you're chasing the market. For example, after a strong bullish candle on the 1 hour time frame, you just feel that okay, my next opportunity, I think it's going to break out, it's going to go to the next higher level. Oh my god, once you come in, oh my god, the market is going to sell off, oh man, and then everything just goes spirally crazy down, right? So that's not exactly what trading is. And over leveraging, right? With the benefits of leverage in the FX market, some tend to take on much leverage than they should, and eventually, of course, the market U-turns against them, and then things doesn't go too well. Inconsistent behavior, right? Some they like to tend to change strategies over the long term because it's not working. Some tend to change strategies over the short term because it's not working. But then, how will you then quantify a strategy whether it is actually working in the long term or not if you actually don't give it time, right? So also, this is what we don't consider as trading to be. Now, introduction to Forex. What is the Forex market? Many of you guys know when we go to, when we travel overseas, we change our money. Okay, that is basically Forex. But do you know actually Forex exists from a spot trading perspective? So that means you can actually trade the current currency in actual life environment markets, right? So it's a decentralized marketplace where national currencies are traded. All right, and it's also defined essentially as the giving of one currency in exchange for another, as vanilla as it is. Now, Forex market is actually known to be the most financially liquid market with approximately a 9.6 trillion daily volume, right? And it operates 24 hours a day and 5 days in a week. Right? And on most parts, it's actually traded on margin, which essentially means it's a leverage contract, right? And the key differences between FX, at least on the exterior side of things, is that it is traded on the over-the-counter market, which essentially means the OTC market. It is not traded on the exchange market, similar to how your stocks and futures are traded like, right? So essentially, if you were to execute a position on the platform, of course, the broker will be your counterparty. Right? And of course, it spreads all across the world when it comes to an OTC environment. And we don't exactly have a physical location or a central exchange to deal with such transactions or FX trades compared to the exchange environment, right? So this is very important to understand that FX operates on the OTC markets, whereas your stocks and futures, they operate on the exchange market. Now, trading session. Some of you guys might know, okay, London, okay, what time did London start? London started at 3 p.m. Singapore time. Or US possibly is going to start at 9:30 around Singapore time, okay? But there's usually some of the trading sessions that some of you guys will know of. But do you know actually trading actually starts generally around 5 to 6 early in the morning? Why? Because Sydney opens at that time. Yeah, so that is actually one key aspect because as in the FX environment, as we mentioned, it's a 24-hour environment. All right, we are going across different trading sessions across different countries. So it's also not, although the most volatile sessions can be ideally be in the US and London markets, but it's not important as far as, or shall I say, it is very important to also understand that FX opens actually way earlier in the mornings as well. Now, FX trading. What makes FX trading so appealing, right? First few things, the lower barrier to entry into the market, right? You can enter with a relatively small capital. Later on, I'll actually walk you through how you can possibly do that. On top of that, the higher volatility, right? The FX environment, especially the more G10 environment, the G5 and G10 FX pairs tend to be very volatile, not even, especially sometimes during the news environments or news releases times as well. Right? The transaction costs, of course, with our Phillip Nova MT5 Flip MT5 platform, you can experience zero commission and very tight bid to ask spreads as well. The leverage, of course, with according to MAS regulation of 20 times, you can get margins from 5% of any of our FX instruments. And of course, not to mention the higher liquidity environment that makes FX trading much more appealing to many investors and traders. Now, you might ask me, hey, Murali, what is the top most traded currencies that you know of? Is it the Singapore dollar to the Malaysian ringgit? Not exactly, right? It's some of the currencies that you actually see here: the euro against the US dollar, the US dollar against the Japanese yen, the pound US dollar, noted as the cable, even some of the US free Swiss franc currencies, right? Canadian dollar, and also what we know as the Kiwi dollar, which is the New Zealand dollar. Now, when it comes to currency pairs, coming to the categorization of currency pairs, we categorize them into three key categories. Firstly, it's the majors, the minors, and the exotics. So, what constitutes as majors? The euro dollar, US dollar yen, pound dollar, and dollar chef. Right? The minors, you are particularly looking at euro pound, euro yen, Aussie chefs, and the exotic currencies are as follows as well. Some of the commodity link FX pairs which you want to pay very particular close focus, especially in high volatile environments when the oil market tends to move much more. It is these pairs like Aussie dollar, dollar CAD, which is linked very heavily to the oil, and also the Kiwi dollar. Now, where to get started when it comes to majors, right? So what we normally recommend, of course, for young investors is to trade on those pairs which are very highly liquid, much more volatile, so you will actually gain traction whether your trade is actually working or not, rather than you enter a trade within the next 5 minutes or within the next 1 hour, 2 hour, the market doesn't really move, and then it doesn't actually give you the feedback in terms of a response to actually understand whether your strategy is eventually working or not. That's exactly why we recommend investors and traders to focus on the major pairs for now, to give that much more quicker feedback loop, so that not you just you understand what you're trading, but you are actually trading in an environment where it actually moves, right? And of course, with a highly liquid environment, the spreads also are there. You tend to experience narrow spreads as well. And with the majors, there used to be a lot of information actually out there. Of course, one avenue that you can really consider is the FX Factory environment, right? So you can actually go to the FX Factory website. You can actually see a lot of news related to the major currency pairs as well. On top of that, they do have a strong correlation to many of the economical drivers and even economical data out there as well. So for example, if your Federal Reserve increase rate or the decrease rate, right, that will of course have a direct impact on the US dollar compared to a pair which is, for example, like Kiwi CAD, like New Zealand dollar versus the Canadian dollar, right? So the majors tend to do well in this kind of environments as well. Now, how many of you guys actually know how to read a code, especially read a code accurately, right? So we are actually walking you through how you can actually read a code, an FX code, I would say, and from an FX currency pair. So on the left-hand side, what you see right here is the euro-dollar currency pair. The left-hand side is denoted as the base, and the right-hand side is denoted as the code. So essentially, what you're looking to do if you were to long the euro dollar, you're essentially looking to buy the base and sell the code currency, hoping that the base currency will appreciate in value. Likewise for the selling side of things as well. Now, when it comes to the left-hand side and the right side environments, how do we then denote them? We denote them in such a way that the left-hand side is known as bid and the right-hand side is known as offer. Or in some environments, they would also term it as ask. Right? So this is exactly where we will sell on the bid and we will buy on the ask. So selling on the left-hand side, buying on the right-hand side. And the last 4 digits is what we denote as pips. So right now you can see that the code is at 1.1808 and 1.1809, right? So this is what we denote as pips, the 4th decimal figure on the code. All right, so if let's say now on the left hand side, if 8 were to go to 16, that means it has risen by 8 pips, right? So it's actually 16. So let's say if the code now is 1.1816, okay, from the means it has now appreciated, it's now become to 16 minus 8, so it's 8 pips. Now, when you mention about spreads, or when I mention about spreads, I think many of you guys know what is spreads. Spread is essentially ask minus the bid. That means your buy side on the right hand side versus your sell side on the left hand side. The difference is actually the spreads. So then you might ask me, how does a narrow spread actually make me more money? Not exactly the case. Narrow spread is actually better because you get closer to the market prices compared to a wider spread environment. right? So imagine you were to buy, and then you're much more entering much more closer to the actual market price. Now, when it comes to actually terming what appreciates and what depreciates, right? So I illustrate a very quick example on actually how you can understand whether the euro dollar has appreciated or the euro dollar has depreciated. So in this case, if let's say the euro dollar were to drop by 50 pips, essentially that means from an initial quote of 1.1808 to depreciate by 50 pips, now the new quote will be 1.1758. So that essentially means that the euro dollar has dropped, and vice versa, the dollar has appreciated in value. However, if let's say the euro dollar now appreciates in value and appreciates by 50 pips from an initial quote, what you will be like is 1.1808. It will then appreciate by 50 pips, right? So you just add another 50 to the decimal place. You will then see it is 1.1858. All right, so this is how we can understand and try to visualize ourselves essentially what happens when the currency goes up or goes down, and how does the pip value actually fluctuate when it comes to the actual quote. So if you do not notice here that you might actually think, hey, does the 1.18 actually move now? Well, it doesn't really move as much unless, of course, it's a large move environment. Whereas the more emphasis you should actually really take note of is the last 2 to 3 decimal places, right? That's actually where the potential intraday moves are actually usually at, right? Now, when it comes to trading Forex with a 5% margin, right? This is what we call a one standard lot, which is actually essentially meaning it's 100K, right? And then when you use a 5% margin on top of 100K environment, what you actually need to place for a $100 trade, you will actually only need $5,000 up front, right? So that's the beauty of leverage. So it gives you the liberty to hold an 100K position in the market with just $5,000, right? So it's the same thing can be saved with a lower lot size, where we call a mini lot, which is actually known as 10,000. 5% times 10,000, it will be $500, and vice versa for one micro lot, which is denoting as 1,000, and then you add a 5% multiplier right there, and then you can see that the margin required is just $50, right? So that's the beauty of leveraging with margin. Now, if some of you guys still do not understand how margin and leverage actually work, okay, take this for example. If let's say you have a leverage of 100%, right? You can essentially take on a $100 position with just $1 in your bank. Can you imagine how crazy that is, right? So then apply to just what I've just discussed to you. And for some of you guys who love the mathematical approach to things, I've also attached a mathematical formula right below where you can say that margin is equal to trade size times current price divided by leverage. So that means the higher the leverage, the lower the margin you will ever need, right? So of course, in Singapore, we have a regulation. Of course, with MAS, we have a 20:1 leverage, right? So compared to possibly other environments out there, we may offer higher leverage, but of course, based on we operate on MAS regulations, so our MAS regulations have stated that leverages should be at 20:1 for the FX trading environment. Now, introduction to CFD. So apart from FX, right, we are moving to another separate class called CFDs, right? So CFDs, do not get too fearful of the name. It essentially just means contract for difference, where you're essentially betting on a price difference of an underlying asset. And that asset can range across stocks, ETF, commodities, and indices. Now, example of derivatives will include futures, forwards, options, and even swaps as well. But for today's context, let's look at something much more easier. All right. So essentially, the underlying or the mechanics, or shall I say the skeleton of an CFD, is essentially an agreement between two parties trying to settle the difference between an opening and closing price of a contract. There is no physical delivery, just trading on the price, right? And similar to FX as well, this is also a leverage product where essentially you're just betting on the price movement without actually owning the underlying asset, versus of you actually purchasing a stock from an exchange where you actually own that company's share, right? CFD does not operate in that kind of approach. Now, it takes references from price quoted from the underlying exchange. However, it's only usually available when the relevant market is open. It's also important to note that there is no such thing as a contract expiry date when it comes to CFDs, and most of it is cash settled. Now, how can you trade with CFDs or some of the CFD offerings that we have at Phillip Nova will be not just shares, but also be global indices, ETFs, energies, and commodities as well. So if we take into account one of our trading participants back in 2022, he traded actually our oil CFD, right? So if after today you realize that FX is not really for you, you want to actually trade the index because you feel that there's a major move coming up for the indexes or the indices environment, hey, indices is also one asset class you can trade. So we are not bounding any investors who are trading in this challenge to just only trade FX. So that's the beauty actually about this trading challenge as well. Now, these are some of the global indices CFD that we do offer, right? Most notably our NASDAQ, our German index, Dow Jones, and even our S&P 500 as well. Now, share CFDs, of course, they span across multiple exchanges, in particular 5 key exchanges: our Singapore Exchange, our Hong Kong Exchange, our New York Stock Exchange, NASDAQ, and of course, Dow Share as well. Now, some of our top traded CFDs will include, of course, the most famous NASDAQ, NYSE, our Singapore-based exchanges, our Hong Kong-based exchanges, Alphabet, Amazon, JP Morgan, and so on and so forth. Now, for ETFs as well, I think some of you guys might also be very familiar with ETF. We also have our ETF CFDs, right? Most notably our S&P 500 CFD, QQQ, and the others as well. Now, for energy CFDs, for those oil lovers, don't worry, we have not left you out, right? We have our Brent crude oil CFD, WTI as well. Or in the event you're feeling fresh, or you're feeling something that you want to treat something different, right? Arabica coffee is there, cotton is there for you as well, orange juice or even raw sugar. So try something different if you actually want to actually embark on something new, this trading challenge. Now, how do we calculate P&L CMD? That's very important, right? Okay, we talk about the specifics about, okay, what do we have? And how can we actually trade it? But how can you actually calculate a P&L, right? That's the most important, especially if you want to consider to win the challenge, right? So P&L calculation for CFD is relatively simple, right? So in an event where your entry versus your exit price, right? Your long trade and your trade size is 10 shares in this case, it essentially be your exit price minus your entry price times the number of shares you own. So in this case, you own 10 contracts, right? It will be the price difference times by the number of contracts, right? So that essentially means you got $300 profit. Okay, and vice versa for a short trade, right? It will be your entry price minus your exit price in this case, because it's a sell entry, time and multiplied by your contract size, basically the number of contract, and then eventually you will of course come up to $40 times 10, and then that will be your $400 profit. Okay, so it's vice versa. However you go long and short, just note that the entry price and the exit price subtraction will differ whether you are longing or shorting. Now, when calculating P&L with CFD, okay, it's relatively straightforward that the exit price, if it's lower than the entry, the P&L will be negative if you are in a long trade. If you're in a short trade, the exit price is higher than the entry, then of course your P&L will also be negative, right? What we always advise investors and traders is, of course, it's a leverage product, right? So exercise your proper risk management, okay? Now, some of the mechanics for CFD when it comes to margining, right? So how do we margin CFDs? So of course, our Brent crude oil, most notably, is going by per 100 barrels, right? So essentially, when it comes to 1.1 contract a barrel, that essentially means it's $70, assuming that's the current price, times 100 barrels, you'll get 7,300. Apply that 20% margin, your initial margin upfront will require 1,460, right? So similar for Netflix, which of course they don't operate by per barrel, they go by per share. In this case, if Netflix is one share, $100, you apply a 20% margin, you will need a $20 upfront, right? NASDAQ 0.1 index, okay, 20,000 times 0.1, you give you 2K, and then vice versa with that applied margin of 5%, you then require a $100 margin upfront when trading contract of NASDAQ. Now, trading costs, when it comes to, of course, using our Phillip Nova 75 platform, we do not have commissions, platform fees, exchange fees, or whatsoever. You just pay the spread when, of course, you're entering on the market, and then, of course, there's an overnight fee, which we denote as swap. Now, swap, of course, it just essentially represents that when you are carrying a position overnight, there are a lot of intertwining financing charges involved. Now, some of these charges will constitute of financing costs based on benchmark rates, interest rate differentials across different banks, different countries, and of course, you also have the cost of carry adjustments, and most notably, we do have sometimes corporate actions on the particular stocks as well. And these corporate actions might come into combination of not just a stock split, sometimes even a dividend attached to it. Right, so it's always important to know what you are trading and whether there's an incoming stock split which actually is happening, which can cause sometimes the price to go up or go down at times. Now, calculating swaps in this case is pretty similar as well and relatively straightforward, where you can use our MT5 platform, locating the tick value from there. All right. In this case, if you're, for example, you're long one lot of NASDAQ CFD, 1 times 0.1 times by minus 27.57, which is the swap long value you can see on the bottom right of your screen, that will essentially mean you're paying minus 2.757 US dollar per day if you hold it overnight for 1 day for one lot of NASDAQ. Right? So you can actually find this on the Phillip Novice MT5 platform. When you click the symbol, right click, go to contract specifications, and all this information will be out there in front of you, very transparent as well. Now, some might ask me, okay, you talk about FX, you talk about CFD, then what is actually the key advantages of trading CFDs? Now, CFDs have also typically a small barrier to entry, right? Compared to owning actual shares, all right? Simply CFDs can usually have smaller and affordable contract sizes, right? You also can trade in both bull and bear markets, where you can actually denote to either long or short in different cases and different market environments, right? Where you can take note of or basically take advantage of even the upside or downsides. There's actually no expiry date as well when it comes to trading the CFDs, and no risk of delivery. So you can essentially and perpetually hold the position for as long as how you want, but just note that there is no delivery and all of it is cash settled. There's also lower trading costs, like I mentioned, zero comms, a lot of capital efficiencies when it comes to the margin environment and of course the leverage environment as well. And of course, if you want to hold a hedge position, you can essentially hold long and short positions on the Phillip Novice MT5 trading platform. All right, so just something interesting compared to possibly other platforms out there which may not allow you to do so. Now, I've covered a bit more on Forex and FX trading now, and also CFD trading, I should say. Let's move on to the fundamental or technical analysis side of things. Now, in the analysis side of things, when it comes to trading, there's two main key analysis. First is the fundamental analysis. Second, technical analysis. Let's first tackle fundamental analysis. So fundamental analysis, essentially, right, what you are trying to do is to determine an intrinsic value of an asset based on many economical events happening across the calendar, across the week as well. So this can include financial and geopolitical factors, black swans event even, and also other related elements. Most importantly, you're looking at key economic indicators like GDP, employment numbers, inflation, interest rate, central bank policies, and some of the geopolitical stability happening within the country as well. So when it comes to fundamental analysis decision making, essentially you're looking at economical data releases, central bank guidance, market expectations, and some of the currency's relative strength before actually having a bias towards a particular direction for a particular currency pair. Right, so that's how actually you can formulate yourself if you are a fundamental trader or you aspire to be a fundamental trader. This is exactly how generally fundamental traders make their trading decisions. So one key area where you can actually look at economical data is this place called Forex Factory, FX Factory, right? You can Google it, search FX Factory. It's this blue website page which gives you all the key economical events, data releases, expectation, and also the live number whenever it pops up as well. So of course, if you guys would know, if you're tracking the news tonight, there's a PPI coming up very, very soon. So you can actually look at the PPI numbers coming up tonight, okay, on this website as well. Now, technical analysis. Some of you guys, especially for intraday traders, when it comes to trading challenges, you will want to do one thing, and that one thing is technical analysis. And I think most of you guys actually love technical analysis a lot, as much as I do. So what is technical analysis? We predict price movements based on historical volume, prices, and also the eventual movements as well, right? We focus on patterns, charts, and some of the indicators like RSI, MACD, stochastics, so on and so forth, right? We focus on price trends, support resistance level, and many other indications as well. I know there are fantastic volume traders out there, and that can also constitute as also a technical analysis element. So eventually, you can also see from below some of our pictures, we see resistance zone, support zone. This is essentially how we constitute our decisions. Now, some might ask me, hey, if you know that this currency is fundamentally good, how do you then make a trading decision, or how do you know when to buy and when to sell, right? So that's when actually technical analysis come in to complement, to not just narrow the decision making of where you should buy and where you should sell, but also where you can actually exit, and most importantly, when you can exit out in a profit and execute out in a loss as well. So technical analysis helps you to narrow such decision making. And of course, not to mention, it is very short-term driven, right, compared to many of the long-term approach, but it also helps traders to identify all your exit opportunities and also points. Now, technical analysis. Ideally, what you want to do, you want to identify the trend early. You want to enter the trade before some of the early trends begin, and eventually exit the trade when you see sign trends or we see price movement changing. Now, some might ask me, when is the best time to trade? Of course, the best time to trade is usually when the market is changing and choppy environments. Not that shit. Not to say that it should be avoided always, but just know that when it comes to choppy environment, the kind of management techniques when you need in your trade need to be more robust. All right, and your risk to reward also might need to be adjusted as well, right? So I'll be introducing two concepts. Okay, just in case if you may not know, there's two general concepts when it comes to technical analysis. One is the Western technical analysis. Second is the Japanese technical analysis, right? Both are equally great. Both are equally unique and awesome in their own ways. Okay, it's really depending to what you like to choose and what suits you. But I'm here to just introduce some of the key concepts and some of the more interesting elements into this analysis approach. So Western side, you got support resistance, chart patterns, technical indicators, volume. Whereas on the Japanese side, you really focus a lot on candlestick patterns. Within the candlestick patterns, you got naming conventions, right? So one example you can see here is inverted hammer, another shooting star. Right? They might think, wow, these kind of names are very creative, right? Yeah, but when you actually see it in the live trading environment and you see inverted hammer, does it always indicate a buy? Does it always indicate a sell? Yeah, this is something to also think of. Okay, and Japanese candlesticks are denoted in a way, just in case if you do not know how to interpret it, they are actually denoted in a way that you can see there's always a wick, there's always a body. Now, very similar to how many mathematical diagrams actually work or we have studied in the past, Japanese candlesticks follow a very similar pattern. So you can see on the left hand side, you see a bullish candle. On the right hand side, you see a bearish candlestick. Now, I want you to look very closely into where the highs and where is the close and opens and the lows are for both of these candlesticks, right? So for a bullish candle, of course, the open will be slightly more lower, and then the wick is exactly where it went to, but it did not return there. All right. Then eventually it went up, okay, to that high, and eventually it closed at where the code is, where the close is denoting. So you can see that forms a bullish candlestick pattern, and vice versa to how the bearish candlestick close. It opens at the high and closes where it says it closes there. And of course, during the point when the candle was still open, right, where was the high and where was the low? Now, candlesticks are very important, especially when you're trading on the higher time frames, because they do signal whether buyers are in consolidation, whether the buyers are in an uptrend, whether the buyers in a downtrend, or is possibly weaker volumes, actually impacting. And you can actually see weaker volumes actually translating into candlesticks as well. Now, when you use Western and the Japanese technical analysis approach, you might ask me, is this then the secret formula? Well, not exactly, because these techniques are not exactly mutually exclusive, right? Some might say they're powerful, some might say they're not. But I've seen great traders trading on the Western TA and also on the Japanese TA as well. So it's what suits you best. Just note that Western TA, you are generally identifying the overall trend, the support and resistance zone, and some of the trade confirmation via certain indicators. Whereas for the Japanese side of things, you are really very candlestick driven. You are very focused on how the candle opens, how the candle close, what time did the candle close on the 15-minute, or how the candle closes on the 4 hours, right? And then you are pinpointing entry and exit timing based on your price action psychology as well. Now, very important takeaway from today is if you can just put away some of the challenges, requirements, and all that. Sometimes you might just understand, hey, Murali, how do you actually identify a trend? What is an uptrend? What is a downtrend? Candlesticks is so difficult sometimes to actually notice trends. All right. So I want you to just pay close to the next few slides where I'll be actually walking you through how can you, notice an uptrend forming or an uptrend already has formed via a series of higher highs and higher low patterns. So you can see here what constitutes of an uptrend. Some might say one higher high, one higher low. Well, it takes two hands to clap, right? Similar to how we approach uptrend identification, we identify two higher highs and two higher lows. That essentially will constitute as a uptrend forming. So you can see here there is several, at least 4 higher highs created and 4 higher lows created. Now, when it comes to the identification of a higher low or higher high or lower low, these higher highs and higher lows, right, are major turns in prices. So what do I mean by major turn in prices? That means prices do not stay there very long, and there is a large impulsive move down and eventually on the reversal side to create the higher high or higher low. So you can see that the higher high, higher low that I've drawn out here, right, are always impulsive moves. Price do not stay at these levels very long. So that essentially means that there is either the nice support there or the nice resistance there. Because chances are when prices come back to this level again, a similar behavior could potentially be replicated. And that's how you can slowly start to picture yourself and how you can position and create your own strategies. Similar to how a higher high and higher low and even an uptrend was denoted, similar to that is how a downtrend is also can be denoted. Now, downtrend essentially means you're going to identify 2 lower highs and 2 lower lows. Okay, you're going to connect these 2 lower highs and 2 lower lows and essentially try to form like a trend line. Now, I'm not a big fan of drawing trend lines because if I were to draw a trend line and if I were to ask one of you all to draw a trend line, I'm very pretty sure it will look very different, right? But if we start to identify structures, or if we start to identify major turning points or prices, you can get to really see, okay, where is the higher highs or where is the lower highs or where is the lower lows actually forming, and am I actually following the trend? Now, stay tuned till the end because I'm actually going to be sharing one of my key live trades that I took yesterday morning and how actually I made the trend work in my favor and how actually I positioned myself in the trade before actually the trend broke out. All right, so bear with me for this. Now, sideways trend. So very similar to sideways trend, we also like to identify equal highs and equal lows. So you can see major turn in prices, right? Where I have demarked the rectangular box is where I identify the major turns in prices, right? So you can clearly see there's a lot of high broken, there's a lot of low broken, but generally we tend to stick in the range. So now if I were to tell you, do you think you would have sold at the high on the extreme right hand side rectangular box that you see on the right hand side? Probably not, right? There might be a lot of breakout traders looking to buy at the high there. Then eventually everybody got fake out and everybody just, crumble. But that is why it's very important to respect ranges, right? Because when you respect ranges, they tend to respect you back in such a way that you position your trade in a way that you expect the market to give something that the market has done before. But if you're expecting the market to give something the market has not done before, then you're not just betting on something which never has happened, but you're essentially reducing the probability of the trade working out. Right? So remember, it's all about trading in probabilities and, of course, formulating a plan with actually aligned with a mathematical and a statistical edge attached to it as well. So sideways trends, when it comes to actually identifying them, I'm pretty sure most of you guys were able to identify sideways trends. But how do we then trade it? Now, that's another question. Okay, this is how it looks like without the candlestick. Very similar sideways pattern, support, resistance. Okay, back to support, back to resistance, and back to support again. Right? So some of you guys might say resistance, support. I don't usually use that convention, but why I'm sitting out here is because it is a very good platform for especially beginner traders to understand what is support and what is resistance. So of course, resistance here essentially means like an imaginary ceiling that price is trying to go over, but it cannot go above it, right? And support is the price is trying to go below, but there is some demand. Somebody is continuously keep buying at that level and it's causing that range approach. So you might ask me, Morali, when do range market tend to happen? Well, it can happen usually at any point of time in the market, okay, but it tends to happen naturally before news releases because there is a lot of uncertainty in anticipation to what might happen. So most of them, they tend to stay out of the market, creating such tight ranges, right? Tight ranges you can still make quite a bit in a tight range market, but you got to be very cautious of your risk as well. Now, when it comes to MA, moving averages, I think some of you guys will know what a moving average is, but let me run through for those who do not know. It's a technical indicator which smooths out price data, which constantly creates an updated average price. Okay, so it's more of a smoothing out effects because it doesn't really, because when you were to look from a lower high, lower environment to high, to low, it tends to create some noise. Whereas MAs tend to create like a general trend line on where exactly price is moving. Is prices ranging down? Is it going on a downtrend? Is it on an uptrend? It produces a line. And within this moving average, you got two different types. You got the simple moving average, which calculates the average price over a specific number of periods. And then you also got the exponential moving averages, okay, which gives more weight to the recent prices. Right. So ideally, it tends to be a bit more responsive to newer information and price changes, at least based on historical evidences. But there are some traders who actually love the simple moving average. So it's really what suits you and what helps you in your trading journey. Now, this is how an exponential moving average looks like. The 20, 50, and 100, and eventually the 200 signals weeks. That means it's basically 20 weeks, 50 weeks, 100 weeks, and the 200 EMA. So you can see that, okay, generally we have experienced a very large sell-off on the dollar yen, okay, but do note this is not the current price, okay, this is back in 2024, okay, we have experienced a very sharp sell-off. So what does the EMA is trying to indicate? You can see a slight slope downs on the 50 EMA to the 100 EMA, but the 200 EMA, you can see the 20 EMA, it has a sharp drop. So as long as price is trading below these EMAs, they tend to be on a downtrend. So that's how we tend to denote EMAs like. However, you can see that the 200-week EMA, we have yet to reach the 200-week EMA. So that might signal that, hey, is a trend reversal, is that still in play? Because the 200 EMA has not been broken yet by, of course, the candlesticks. So is there any support structure at the 152 to 153 levels? That's something to consider, right? So this is how we can slowly start to determine trends with MA. And when it comes to combining indicators like the 20 EMA and 50 EMA, right, essentially what we are trying to do is we're trying to determine whether it's an uptrend, whether the candles are above these MA lines, which will then indicate, for example, if the candles are above the 20 EMA or 50 EMA, we can then determine that the trends are on a general uptrend. Vice versa, if it's below the 20 and 50 EMAs, we are generally looking that the trend is slanting down or heading down. So when you know that the trend is, let's say, on a downtrend, so you then constitute yourself is, okay, if it's on a downtrend, should I be looking for shorts or should I be looking for long? Yes, some of you guys might be thinking, I should be looking for shorts because it's a downtrend. But when you come to the actual life environment, how many of you guys might actually be catching the falling knife? Because you think that low cannot be actually going lower, right? So that's something to also think about when you want to try to formulate your plan, okay? Moving averages, when it comes to advantages and disadvantages for many indicators out there, not just for moving averages also, right? Good thing is they tend to give you the initial trend direction. They smoothen out the price. And of course, when you're looking for a higher time frame trade, 200 EMA, 200 MA, it's more of a weighted approach and acts as a much more of a stronger support and resistance level. Many professionals also use EMAs and MAs, especially on the daily and weekly timeframes, to understand the trend much more better, to ignore some of the noises which happen after news data releases, which tends to affect on the intraday environment much more than the higher time frame environments. Right? So these are some of the key advantages with MAs. Okay, and it's best really used in trading markets usually. Now the disadvantage is, some of you guys will know, it's an extremely lagging indicator. Okay, it tends to lag a lot. It's less effective in sideways markets, and also bear in mind that these crossovers that might happen on the 50 MA to crossing the 200 MAs is a golden cross, some might say, and also some might also denote as a dead cross if the vice versa happen, and it can actually happen after a significant move has already happened. So when it comes to this golden cross, when it comes to these dead crosses, of course the naming convention might scare you all, but the key thing to understand is these crossovers can happen late. That means essentially price has already moved, and then the crossover, and eventually the trend starts sliding down, or the line starts sliding down. Okay, so just take note about this moving averages and the key advantages and disadvantages. Now, I want to introduce you, okay, to another key technical indicator such as the RSI. Okay, it's a momentum-based oscillator which measures the speed and change of the price movement. It's used to identify whether overbought and oversold conditions, and helping markets and helping traders themselves navigate the markets when it comes to potential trading entry decisions or exit decisions as well. So if you can see right now, where is the RSI indicating here? The RSI is indicating right in between of that 30 to 70 benchmark. Okay, so then how do we then read the RSI? Okay, essentially, okay, when the RSI drops below 30, we would like to say it's oversold. Possibly you might want to look to entry or look for entries to buy or go long in this market. When it is crossing that 70 level, okay, we essentially are trying to say that the market is overbought. That means, the buyers have already potentially have exhausted themselves. We are in potentially quote unquote overvalued conditions, that the RSI is saying, hey, we have gone up too fast. Okay, maybe there might be a reversal coming soon. Right. So this is exactly what it's trying to denote, that is, if it's above 70, you're potentially in that overbought environment. Okay, so this is how you can use RSI to your own trading advantage to make those informed decisions when it comes to not just entering into the market, but also exiting the market with a positive PNL or a negative PNL. And of course, with RSI, similar to moving averages, there are also advantages and disadvantages here. So very briefly, okay, of course, when it comes to advantages, you get to see the overbought and oversold environments. You get to see potential divergence signals happening, and it tends to work very well in range-bound markets. But what if markets aren't exactly very range-bound, right? What if it's a very fast-trending market? What if it's a market that, for example, we are in a geopolitical situation where perhaps countries are going against each other, right? And then you are trading oil, and then oil tends to go higher and higher and higher. Higher keeps going higher. 60 becomes 100, 100 becomes 120, right? Your RSI will potentially be showing overbought, 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 overbought. Then will you then be continuously be selling continuous at 60, at 70, and 80, right? So there's something to really think about. Now, the disadvantage is, like I also mentioned, okay, it's not very effective in stronger trading markets, especially one-sided and one-dimensional markets. Very prone to whipsaw, especially in lower liquidity environments, in lower liquidity trading hours as well. And personally, I feel that this indicator generally requires a bit more confirmation. Okay, it shouldn't be used in isolation, and it's better combined with another indicator like moving average, or with your own set of technical suit, right? Which might make your decisions much more informed. Now, something that you have seen online, or I have personally seen many traders also using patterns, reversal patterns, double top, head and shoulder, rising wedge. Some of you guys might believe in this, some of you guys may not believe in this, but at the end of the day, the market is an invisible hand, right? Everybody makes a decision based on different indicators, different informations, right? And this is one of the approach that many traders love, which is the chart pattern. So you can actually see that the reversal patterns, when it comes to actually the trend potentially changing, these are some of the reversal patterns that you might want to take note of. Now, it's important to also bear in mind that a double bottom on a 5-minute time frame does not potentially change a trend happening on a 4-hour to 8-hour time frames, right? So it's very important that you apply these patterns on the right time frames, right? Because time frames is very important. The moment you get confused with the time frames, not just you will confuse yourself with your trading plan, and eventually risk to rewards will get affected, and the loss is just inevitable. All right. So when it comes to trading pattern, these are some of the patterns you can consider: head and shoulders, which are usually potential reversal petals to the downside, double bottoms generally to the upside as well. Some continuation patterns that some of you guys have actually seen happening very closely in some of the key markets right now, which is happening, is the bullish pennant, rising wedges, bearish pennant as well. Now, then you might ask me, hey, Murali, do you often see this happening in the FX market? Yes, I do, but it's actually how you would like to interpret this. Now, just because you see a rising wedge, right, which is on the bottom left of your screen, you put your stop there, your entry there. Well, if you have think about uptrend, remember I was going through just now, what does an uptrend constitute? Two higher lows and two higher highs, correct? Does that seem like an uptrend to you? But why is a rising wedge asking me to go short when your trend says it's going long, correct? So that's when that potential conflict might happen when it comes to trading your on chart patterns. So you need to understand which one you want to pay close attention to. Do you want to pay close attention to the rising wedge, or do you want to pay close attention to the trend? Okay, then you might ask yourself, what does historical pattern say? What does your strategy that you have backtested say? Does it say to prioritize the trend which is happening, or does it say to prioritize the rising wedge? Right? So this is some of the data that you have to take into account before you actually place a trade. Okay, and not just thinking that just because you see as a rising wedge, maybe it's a chance for you to go short. Yes, there's always a chance in the market, but how many chances will you get in the market? Now, for candlesticks, right, we tend to denote candlesticks in certain patterns, right? We look to categorize these candles as a full body candle, basically like a long body. So what essentially means, if you see on the left hand side a strong bullish candle, a strong greenish candle versus a strong bearish candle on the right hand side, is effectively trying to say that it is a strong momentum to the one side, either bullish or bearish, reflection conviction. Now, is this a strong reversal candle? Maybe yes, maybe not. But from a technical standard perspective, once you see a bullish candle happening, basically it means that there is buying environment there, and there's a strong buying pressure. And when the candle closes, there is a full-fledged long-bodied green candle. That means there's a significant environment that the buyers are actually present there. Or of course, vice versa, if a bearish candle happens. Okay, some potential use cases is, of course, you can tend to confirm a trend direction, and this can essentially form your confirmation bias when you're trying to enter into a long or a short. Okay, so this is some of the areas that you can use candlestick to your advantage when it comes to trading. Now, I like to refer to these as the doji candlesticks, okay, known as the small body short candlesticks. Okay, that means the wicks are long, but eventually the opening and closing prices are very tight. Okay, this essentially means that there's a lot of indecision in the market. That means it can literally be a 50-50 decision. Normally, when you see doji candlesticks happening in the market, it can reverse to the upside very strongly, or it can reverse to the downside very, very strongly as well. So if you're the kind of trader that likes to trade in a range market because you want to bet on that upside potential or the downside potential, these are some of the candles that you want to look at. Okay, but of course, I would advise when we use this candle for trading, try to wait for more confirmation first, because it can warn of a potential reversal, but it can also go against your position, eventually hitting your stop loss as well. All right. Now, just one last candlestick pattern. Okay, there's a lot of candlestick patterns out there. Okay, but eventually I will need to have another class for this. All right, but just for today, I just like to walk you through another cute pattern, which is what we call the hammer and shooting star pattern. Okay, what we note this as a short body kind of pattern where the wick is very long, where the opening and the closing prices for both the hammer and shooting star is relatively not huge, but relatively decent as well. Also, reflecting indecision and lack of momentum, but is also often used in consolidation zones and potential reversal point. So some of you guys might think or have seen it before that once a hammer pattern is in the market, especially maybe on the 1 hour time frame, hey, a reversal might be happening, or a liquidity grab, or a liquidity push, or they've already caught already one in the bottom already. Maybe now it's time to go higher, right? So this is where you'll see shooting stars and hammers happening, usually in reversal areas. Okay, so this is something to really pay close attention to as well. Now, ideally, when it comes to combining both the Western TA and candlesticks, right, how can you then look for a confluence, right? So one area where you can actually look for a high probability trade setup is you have found a support level using, of course, EMAs like what we went through. Then you see a bullish hammer stick forming, okay, which indicates possibly your bullish reversals, or if in some cases you might think that, hey, they've already caught the liquidity below already, now it's time to go higher. Then your RSI is also pointing towards an oversold condition, which indicates, hey, maybe it's time to go long because we have sold off a bit too much, right? Then your interest, then you start to then make an informed decision. You start to create your own trade plan, and then eventually you start to see, hey, this is potentially a strong buy signal. Could you then look for an upside potential? Then maybe I can justify a long entry. And when you justify a long entry, what is then your risk to reward that you can look at, right? So this is how you can formulate your trading plan. Then trading becomes less more of a gambling approach, rather a more structured, robust, and an informed approach, right? That's the whole idea when we want to trade the markets. Now, like I said, it is not mutually exclusive. All right, Westerns are great for overall trend identification, support resistance zone confirmations, but your Japanese TAs are looking to really pinpoint your entries and exit timing as well. So it's quite interesting when you actually look at these two confluences, not just playing together, but actually both can actually work hand in hand as well, right? Now, before I go on to, of course, demonstrating on how actually the Phillip Nova's MT5 trading platform works, okay, I will actually go into more in depth with how you can formulate a trading plan, some of the risk management tactics, and most importantly, how I even trade the markets. I think some might be also very interested in how actually I look and view at the markets. So don't worry, I'll be sharing my live trade then and there as well. Now, a basic strategy in 5 steps. Okay, let me just walk you through these 5 key steps. Number 1, identifying the trend. One way to do that is if the price is above the 20 EMAs, 50 EMAs, or your simple moving averages, you can then determine if it's an uptrend or downtrend. Then you can see area of consolidation, right? Like you can use your bearish pennant, your bullish pennant, ascending triangles, head and shoulder patterns to identify potential trend reversals. Then you can justify your risk to reward. Hey, has the market been in this place before? If the market has been in this place before, it's given me 30 pips. It's given me 50 pips before. Is it too much of an ask for the market to do something similar? Now, that is one thing to also consider. Second thing to also consider is ideally, if you were to risk 1%, you will want to get at least 2 to 3% out. That is a healthy risk to reward. Okay. And I'm not thinking from a one trade perspective. I'm also getting everyone to think from a 100 trades perspective, a 1,000 trade perspective, a 100,000 trades perspective. All right. Trading was winning. Trading is all about winning in the long term. All right. It's never about winning in the short term and then losing in the long term. That it doesn't make any sense, right? Unless you're in for the quick buck, get your quick buck, leave. But I'm telling you, that's not trading. That's essentially gambling, right? So after the third step, once you evaluate your risk to reward, eventually what you're looking at is you can then determine yourself, hey, there's a symmetrical triangle, there is a risk to reward potential there, there might be some upside continuation. You already told me that, hey, there's higher high, higher low, lower high, lower lows. Hey, maybe there's an uptrend forming here. Could I actually ride the uptrend? What is my risk to reward here? If this time I apply a 4:1 risk to reward, the next time I'm in this setup, can I still bargain the same risk to reward? That's something to also consider again, right? And of course, when it comes to placing the trade, there's always 3 things to take note of. Number 1, your size. Okay, do not say over leverage, but do not trade more than your size. Okay, because that will not just affect your PNL, but that will affect you mentally as well. Secondly, your stop loss is very important. Okay, if you do not place your stop loss, you do not know when you're going to lose or how much you're going to lose. You are not trading the market. I'm telling you, the market is trading you. Okay, and you want to avoid that. Remember, you need to control what you can control the market, because the market is not exactly very controlling. Okay, and it doesn't follow your rules when I say that. So always remember to set your stop loss, trade in your appropriate size, execute at how you want to execute, whether you want to use your limit orders, whether you want to use your stop orders, or eventually, if you want to enter into just the market price, you can do so as well, right? Ultimately, okay, this is how you should formulate your trading plan. You can get into your position. Now, that's only one battle. What is the next battle? Is how you manage your trade. Is how you manage your positions. Where should you place your take profit? Do you need to have a take profit 1? Do you need to have a take profit 2? What if prices come into your area? What if prices are ranging? They're not moving. Do you then need to make another decision? Okay, or if let's say if prices is going to hit your stop loss today, you then need to move your stop loss. I hope you do not move your stop loss because that will affect your long-term decision trading making decisions. Okay, so all this constitutes under trade management. That means once you are in the trade, you are now in the trade management category. Okay, this is also very important. So how you manage your positions is also very essential to not just long-term profitability, but also better psychological decisions when it comes to trading. Now, before I, of course, go into actually how I trade and show, of course, share with my my trading ideas and my live trade that I took technically yesterday morning, I want to show you how I trade and how I view the markets. Then you ask yourself, hey, does Murali actually go through, or does he actually use the Western influence or the Japanese influence? Let's see. Now, when it comes with trading the markets, at least for me, we need to understand the income that we're trying to generate. Most traders, they just want to, hey, I want a short-term intraday trader. I'm a high-frequency scalper, or I'm an intraday trader, man. Get your objectives straight. You need to understand the income that you're trying to generate, or whether your lifestyles suit that kind of trading style that you want. If you're kind of a person that I just want to chill, I want to sit back and relax, I want to see weekly incomes coming in, hey, then you fall under the long-term wealth category, which is weekly income, your swing trading opportunities. Weekly, that means your entire time frame starts from weekly, daily, and then going into the 4 hours. Right? This is how you should constitute your trading plan, because the pips that you are trying to generate here on the weekly time frames, if you're trading on FX pair per se, you're looking at least 300 to 500 pips. Now that cannot be usually be achieved on an hourly income or a daily income perspective. That's usually quite impossible, especially when looking from a one-day move, unless of course there's an intervention of a central bank or some sort. Okay, monthly income, you can see we start from the monthly time frames back down to the weekly and eventually the daily, right? So it has to be suited to your lifestyle. Remember, the markets do not follow or should not dictate the kind of trading lifestyle that you should have. It should constitute from you. Okay, you can control what you can control. All right, and these are some of the time frames that you can bear in mind and pay close attention to the kind of income they're generating. Then you might ask me, Murali, for this trading challenge, am I, of course, I shouldn't be focusing on the monthly timeframes and weekly timeframes, right? Not exactly, I would say. However, you should pay close attention to the weekly timeframes, because there might be a large move. Maybe you are in weekly low environments. Then you see a daily trend. Your daily timeframes, your 5 minutes or 50 minutes is forming an uptrend. Hey, maybe there's an impulsive upside waiting. You see how from a higher time frame, I look down to the lower time frames. If I'm at weekly low, would I want to be selling at weekly low? Or if I'm at yearly low, would I want to be selling at yearly low? Right? Even if I were to sell at yearly low, what is my risk to reward? Okay, that means from 100, if let's say I'm selling at 100, then can it really go down even more lower? Maybe it can, but what is the probability then? Maybe there's a chance of an upside. Maybe it's catching everyone selling at the low, right? Maybe there's a chance of a reversal there. Then how do you then determine the reversal? You see for trend changes on the 15 minutes. 15 minutes, I see an uptrend forming. Hey, that might constitute as a chance of course, changing into an uptrend, right? And of course, something along the lines of technical analysis. Some of the things that I want to start trading as, or so let's say before I start trading, is ensuring I'm the right mindset to trade, reading up on some of the environments, noting key events, understanding relative strengths, and so on and so forth. Some of the key concepts I use: fair value, demand, of course, potential volume, actual volumes. Okay, I'll look at, of course, some of the key environments of where I should buy and where I should sell. Okay, and some of the price structures and concepts that I like to use in my trading also. Okay, more, or should I say, two key important things is structure and location. These are very important things because that will affect your risk to reward ratios as well. Now, my trade process, I'd like to just quickly walk you through. Higher time frames, I'm looking at higher on curve. Okay, I'm looking from right to left. I do not start from the left to right. Okay, intermediate time frame trend, I also will look to right to left as well, and then eventually I'll enter on the lower time frame as well. Same two things: structure and location. Now, this is a live trade that I took on the 1 hour. Okay, so you can see on the right hand side, okay, we can see weak bullish candles, right? You can see a hammer pattern also. As I walk through with you all, you can see a hammer pattern there. And you can see that I'm looking at two small wicks on the bottom right side of the screen. Basically, what it's trying to say, there's a higher high formed on the left hand side and on the right hand side. So basically, a higher high was already created on the 1 hour. So coming down to the 30-minute, what I actually did is I identified my key higher highs and higher lows. I got two lower high. I mean, I got two higher lows. I got two higher high. I even have actually an additional one more there, right? So I see like a wedge forming, potentially a bullish flag also. Then I can see I come down in. Maybe the trend is actually sloping. I mean, heading up, right? This is not a wedge pattern. I'm actually following the trend. Then I go down to the 5-minute. I understand that I'm in a range bound market, but market has pushed higher, and this is where I can potentially look to long. Okay, so I can see in my arrow there is where I actually look to enter, and then eventually, and where my stop loss is also. So in a ranging market environment, as you can see my 2HL there and my 2HH there, okay, we are now in a gentle and a decent uptrend. So I'll look to enter where, of course, my arrow was pointing lah. So where I actually did was I entered at that price. So what do you think actually happened? This is actually what happened, and I entered on where the blue circle is actually pointed. So when prices came down, it came down in a very quick manner. Okay, it took my entry. I was already in the entry at a point in time. My stop loss was right, just right below, and then of course I got out with just 30% at TP1. Now, how many of you can guess how much risk to reward I made on this trade? Some of you might say maybe 2:1, some 3:1. Okay, but do you notice something which happened after the TP1? Right, price continued to go higher, correct? But why did price continue to go higher? Because the probability is that trend is actually in your favor, and the trend is actually your friend, right? So that means you may not even need to religiously follow that TP1, because of how prices are moving so fast on the upside. There might be even a chance for you to ride even further higher. So what I did is I actually just closed off 30% of my position at TP1. Okay, and some of you guys would know what actually happened after that. So do you know what actually happened after this? Notice where my TP1 is, notice where my entry is, and notice where my stop loss is. Okay, I'm going to go to the next slide. Boom. From just a trade which can potentially make 3:1, when you follow the trend, look at how much your risk to reward can really yield you. All right. So eventually, of course, I got out at about TP2, okay, which is clearly almost close to about 200 points. Okay. When you actually look at how you should trend follow, okay, and what I stated below, right below, is trend following statistically increases the probability of reaching higher TP2 levels. Okay, so what I did here, I started on the 1 hour time frame. I went to the 30 minutes. I went on the 50 minutes and 5. I realized that, hey, I'm in a gentle uptrend in a potentially a breakout stage, right? And this might even continue even higher. So then I was like, okay, maybe I can get out with TP1. And why I got out 30% with TP1, but I didn't get out with all of my positions, is because I realized how was price moving away from the level. It was moving very rapidly, right? So when it comes to trading in the markets, right, they always say trend is your friend, and always follow that. Why? Is because I'm not asking you to short on an uptrend or long on an uptrend just because probably that 1-2 trades will work out. There will be times where this setup fail, right? I've taken this setup multiple times and I've lost multiple times as well. But those times when I'm right, I make sure, because I know there's going to be an impulsive move up usually, right? I tend to, of course, extend my risk to reward to, of course, not just compensate my previous losses, but maybe I can even ride it for even more, right? So that's how it is. You can logically and ideally make your winners run by following the trend while cutting your losses short, right? So this is some of the key things that you can take note of when it comes to trading in a trending market like this. So some of the key all answers that I always use is basically basically these 6 things. Pattern, okay? How is the pattern looking like? Am I on a sideways, trending markets? Okay, what are some of the candlesticks looking like? How do price leave the level? If you look on the left-hand side, prices leave the level very quickly. So what does it mean? That means the buying pressure is still very, very strong. So that means the chances are the prices retracing back to the level might be quite low, right? So that's why I held on to the trade. I moved my stop loss to the break even actually at this point of time and became a risk-free trade. So I can look at other pairs. And this was taken on the NASDAQ. So it was a NASDAQ, is of course a index CFD, right? I'm not trading on the FX market, at least in this case, right? How much time the price spend at level. So you can see here when I entered, right? When it came to my entry at about about 29 plus, right? When you can see the entry right there, it quickly moved away from my entry very quickly and hit my stop. I mean, it hit my take profit within the span of a few, maybe just under an hour. So you can see that's very fast on how a price is moving. So that means I was not that I'm right in that sense, but there might be somebody else also coming in with a large stack of long orders or basically buy orders. Okay, and of course the risk to reward, I'm actually aiming for a minimum 3:1 risk to reward, okay, or even higher than that. And of course in this case it's no longer a 3:1 risk to reward race. You are looking at easily at a 12 or 15:1 already. Okay, now not always you can catch these kind of moves, but these are the moves that you really need to catch because you need to make up for the losses that you have potentially incurred as well. But this is of course not always the case when it comes to trend, when it comes to sideways markets. But when it's a trending market, especially with indices, it tends to be very one-dimensional also, especially on the upside. Okay, and how are we entering higher time frames? Are we entering higher or low on the curve? You can see we entered lower on the curve right here, all right, slightly near the bottoms. Okay, so we are maintaining our risk to reward ratios as well. Okay, so key, just to end off before I move on to the platform demo, always set your stop loss. Never is more than 1 to 2% of your portfolio. Always calculate your stop loss. Always calculate your lot size. Trade based on your stop loss as well. And of course, try to maintain a risk to reward of 3:1. That's very, very important as well. Okay, trade your plan your trade, always backtest your strategy, let the market reveal its hands, cut your losses fast and milk your winners. Remember, more trades doesn't really mean more win. It can also, of course, incur more losses. Trade your plan your trades. Okay, trading without a plan is gambling. Okay, losses without a plan will give you data. Okay, like how businesses expenses or how businesses actually operate, right? They have cost of goods sold. They understand there are certain expenses to business environments. All right, so losses with a plan give you data, but losses without a plan, you don't just learn nothing, but you lose your money at the same time. So do not try to. I will not encourage anyone of you to do this because I've been through it before. Right? Take full responsibility. Do not blame the market. All your decisions or basically all your results come from your own decision making. Okay, so always remember to pay close attention to what you are doing. All right. So lastly, I just want to go through these 5 key psychological areas. Anything can happen in the market. Okay, you don't need to know what to happen. You do not need to know what's going to happen next to make money. There's always a random distribution between wins and losses for any age. Okay, trading is about being, it's not about being right or wrong, but it is a probability game. Okay, so do not overthink. High risk is always, and disrespecting your stop losses are always long-term seeds of financial disaster. Remember why I say seeds is because if you're planting this kind of elements into your trading, you may survive in the next 1 week. By the next 2 to 3 weeks, you may not survive. So do not plant the wrong seeds, right? Okay, so without further ado, I'll just quickly run through with you guys our Phillip Nova's MT5 trading platform. Just a very quick one. I understand I've overrun a bit. Apologies for that. Okay, so this is our trading environment, our MT5 trading environment, legacy environment. Okay, it's been out there for, of course, some of the longest of times, right? So most important thing is not about how you place a trade or not. Most important thing is whether to see whether you're even connected. So on the bottom right, you can see that there's a connection tab right here. So if you can just click login, then you will know that you are actually connected. So I'm already connected inside because there's a 3 bars in place here. Okay, so that's where you know that you're connected. If you're not connected, there will be a stop sign being placed right here. Okay, so as you can see, this is a fresh demo account. I've not placed any trade in yet. As a matter of fact, I just canceled one of my trades earlier, working order. Okay, but just for the illustration for today's purpose, okay, I'll just walk you through what is the essential things. Okay, from the top left hand side, okay, you can see the file environment. So you can get to see most of the setups, the logging ins, the printings, the profile creations will all be done here. But most importantly is into the watch list segments, which is the view tab. So the view tab is not only you can change the language that you want to be viewing the platform, you can also change the different color themes, right? Toolbars, your time frames, okay, your market watch. Your market watch is very important because if let's say I disable my market watch here, you might think, hey, where did the market watch run to? Go to your view panel, click market watch, and all of your market instrument symbols are there available to you. Now you might understand and tell me, Imran, why you only got a few? I remember Phillip Nova got so many. Yes, we have a lot. Okay, how do you access it? Right click the symbol. Okay, go into symbols. Then you left click here. You can see the offerings that we have, the extensive offerings that we have, from Forex to indices to shares to crypto CFDs as well. Okay, so you can then go and click in. They can see that you got NASDAQ there. double click here and it will appear on the watch list right here. And you just need to click OK, and then it will appear. So that's now we're on dollar yen. In the event that you want to put NASDAQ on the chart display here, always put the chart window, and then you can see NASDAQ here. Okay, and of course, there's a quick one in just the interest of time. If you're not a big fan of such colors and layout, do not worry. Okay, make the platform work for you, not you work for the platform. Right click, go under properties. You can change the color scheme, whether green on black, yellow on black, black on, or black on white. You can change to whatever you want here. Okay, so do not think that this is a standardized layout. In the event that you want to change your bull candle to be green, okay, and then your bear candle to be, of course, red, okay, you have these facilities available to you. Your background, if you want to put white or no color, it's also up to you. Let's say you want to put this color, also can. Okay, then your, let's say your foreground want to be black, also possible. Okay, then you can change the environment in this such a way. Then you can say, Emily, well, I hate the grid lines. You don't want the grid line, just untick the grid lines right here. Okay, so this is how you can change your chart display very quickly. Okay, then to zoom in and zoom out, you can use this tab, or you can actually hit the control button and scroll up and down. So that is how you can zoom in and zoom out of your MT5 platform. All right, and your time frames are here. You got 1 minute, 5 minutes, 15 minutes, 30 minutes. In an event, you want to use you want to use like 20 minutes, or you want to use 8 hours, do not worry. Right click the time frames right here, go under customize. Okay, you can actually choose the kind of time frames that you want. So let's say I want 8 hours, I can just insert here and 8 hours pop up. And it's also very, very interesting because you can actually even switch and even range your time frames as well. Okay, now most importantly is how we place a trade in the markets and how we can actually move our entries and stop losses as well. So let's go to dollar yen in this case. Okay, let's go to the 5-minute charts. Let's zoom in a bit more. Okay, and we can see that dollar yen is trading at 159.349. Okay, and now say we are looking to, for example, we look to, let's say, buy dollar yen here. Okay, let's say now I click buy here. Okay, I just executed a buy order at this price. So you can see here, I just bought 0.01, okay, which essentially means 1,000, okay, 1 micro lot of dollar yen at this price right now, because I believe maybe the prices are going up. Okay, and you can see that immediately the position appears in your trade panel right here. Okay, and you can get to see the margin that you used, the free margin which is available as well. Now, you can ask me in this case, hey, then how do I then close the position? There's a lot of ways you can close the position. You can actually just sell it here straight away, or you can even, let's say, right click here and you can look to close the position as well. Okay, so now my next question is, if let's say you want to place a quick, let's say, a limit order in this case, you can go to new order right here. You got different kind of orders that you can place. So in this case, market dollar yen is trading at what, 159.35. Okay, in the, let's have a limit order, same micro lot. Okay, instead of 159, maybe we put 159 point, let's say even 159 even. That means 159.00. Okay, we place a buy limit right here. Okay, and maybe a stop loss we can place maybe at 158 point, let's say 80 lah, 15880 in this case. Okay, so we just initiate a buy. Okay, you can see that the buy orders has been placed right here. Okay, so it's pretty interesting. Okay, so at this point of time, we can then zoom in and you can then consider, you can see where the buy order is. Okay, you can look at our price chart right here, then on the 15-minute as well. Okay, then in the event, like for example, you want to amend your orders. Okay, if you want to take profits or whatever, not, you can even, of course, amend it in your modify order tab right here also. Okay, so right now we are at 159 even, so you don't see the order here because we are now on the hourly charts. You actually see it. Okay, I go to a higher time frame here a bit, so you can get to see the buy limit here. Let me just zoom in a bit more. Okay, so in the event, let's say you want to move your, of course, your buy limit up or down, right? So you can actually see, you can actually move it. So 159 now, you realize that the market coming out a bit too fast. Okay, you can actually move it together back down here, and then of course your price also changes here. So this is what we call the trade on the chart feature, where you can actually move as and when and where you want to move it. Then your stop losses will also follow your decision making as well. So that means when you actually move down your buy limit, your stop losses also follow suit as well. Okay, so it's very interesting that you can trade on the chart with MT5 platforms as well. Okay, so the last thing that I want to really point your attention to is, of course, the indicators here. You can actually use different kind of indicators, trend indicators, EMAs as well. Your oscillators that we use, RSI. In this case, in this case, you want to put your, let's say, a 14-week RSI here. Okay, you can actually set a 40-week RSI and it will appear here. So now you see we are not in that overbought and oversold environment. We are roughly trading in the range right here. So maybe you don't want to execute any trades as of now. Okay, so this is how you can make the platform closer to you and working for you, rather than you work for the platform and have trouble really using the platform as much. Okay, so other than that, okay, if you want to understand some of the contract specification, right click the contract here. You can see the dollar yens, of course, the margin required, and some of the other factors like swaps and even the opening hours right here as well. Okay, so I hope it's just a brief walkthrough about how MT5 works. Of course, there's a lot more other features, like, of course, expert advisors that we won't be covering in today's, of course, content. But at least for the trading challenge, this should be sufficient. Okay. And just to note that if you ever want to understand your performance, do not worry. How many trades you're taking, let's say after 100 trades, you can right click here, you can export your trades, and then eventually your performances will also flash up. So it's a very interesting tool, MT5. It is created for you to make traders and easily trading. And one thing very important with the MT5 platform is not only you can actually just record your trades, see your trades, but you can also understand the exposures that you're also taking. Okay, you also have calendar events. You can look at newses as well, and also some of the alerts that you can actually have from other trading advisors, and also some of the key newses as well. And also your trade journal, whether you're modifying your every single logs about what's going on in your trade and exactly what you are doing with your executions as well. Okay, so without further ado, I know I've overrun quite a bit, and thank you so much to everyone who's listening, especially the young investors here. Okay, I hope and wish you all the best in your trading journey, especially in Trading Challenge, and I look forward to seeing you in our presentation day and our networking event. Thank you so much, and I'll now hand over the time to Junkit to close off the session.
Hey, thank you, Murali, for the insightful sharing session. I think he has really tried to distill some of the lessons that he have learned over the past many years of him trading into a digestible piece of information for us to learn. Now, maybe could we switch back to the PowerPoint slide, Murali? So this session is actually recorded, and we'll be uploading the recording of today's session at our Trading Challenge website tomorrow. So if you have lost the website, it's okay. Just go and Google Phillip Nova Young Investors Trading Challenge, and you'll be arriving at the at a landing page where you'll find this recording. And also as a backup, we'll also be sending you guys a recording of this session, right? Okay, so a gentle reminder again. The trading challenge will be starting on Monday at 5 a.m. SGT. So from tomorrow morning onwards, the trading access for all of your accounts will be disabled, and we'll be resetting everyone's account back to 100K. Now, okay, so over this next few days, if you've got any friends who are interested to join in this competition, so we do encourage you to invite them to join in this experience as well, so that, you know, on the 3rd of September, you can bring them along to join our networking event and make more friends together, right? So I think that the networking event, I think, is something that we truly look forward to on 3rd of September, and we hope to see more of you guys there, right? Next slide. Yes, and also a final reminder to join us on our Telegram channel, where you'll be updated about all the different updates and leaderboard throughout this trading challenge, and we'll also be interacting with you guys through a series of polls and quizzes, to be part of this community. Right. So if you guys have any questions, you can also, I believe in the email that you guys receive, right, there's an email address that you guys can reach out to for if you guys have any questions. I think it's pftertiary@phillip.com.sg. Any questions, you can just write in through the email, and we'll be able to assist you with your query. Now, with that, I think we have come to the end of today's session. Thank you very much for all of you, for all of your attendance and attention today. We hope that this will be a great starting point for your trading journey. right? So we've given you this educational resources to give you a right perspective of what trading is and what trading is not, because a lot of young investors, they come into the market thinking trading is a get rich quick scheme, but obviously it is not. People will take years to hone the skill of trading, and we hope that today and over the next 2 weeks will be a kickstart for you in learning the proper ways of trading, and we do hope to be your partner in trading for the many years to come. Right. Okay. With that, all the best to your trading challenge, and we'll see you on 3rd of September. Good night.